Dear friends, welcome to Anhad channel, where we simplify complex concepts in accounting, finance, banking, economics, insurance, and fintech. In today's video, we will discuss one of the most fundamental subjects in commerce and business studies, which is accounting. In this session, we will understand meaning of accounting and branches of accounting, which are financial accounting, cost accounting, and management accounting. So, let us begin. Accounting is often called the language of business because it records, summarizes, analyzes, and communicates financial information. According to the American Institute of Certified Public Accountants, accounting is the art of recording, classifying, and summarizing financial transactions and interpreting the results thereof. In simple words, accounting helps individuals and organizations keep track of their financial activities and make informed decisions. Every business performs numerous transactions such as purchasing goods, selling products, paying salaries, receiving payments, and borrowing money. Accounting systematically records all these transactions. Let us now discuss objectives of accounting. The main objectives of accounting are: first, recording financial transactions. Accounting records all business transactions in a systematic manner. Second, determining profit or loss. It helps businesses know whether they have earned profits or incurred losses during a particular period. Third, assessing financial position. Accounting provides information about assets, liabilities, and owner's equity. Fourth, assisting decision making. It provides useful information to management, investors, creditors, and government authorities. Fifth, compliance with legal requirements. Businesses are required to maintain accounting records for taxation and regulatory purposes. We now discuss branches of accounting. Accounting has evolved into different branches to meet various information requirements. The three major branches are: 1. Financial accounting. 2. Cost accounting. 3. Management accounting. Let us understand each one in detail. The first branch is financial accounting. Financial accounting focuses on recording, classifying, summarizing, and reporting financial transactions. Its primary purpose is to provide financial information to external users. Users of financial accounting information include investors, shareholders, creditors, banks, government authorities, and tax departments. Financial accounting prepares many statements. These are: 1. Income statement, which shows profit or loss earned during a period. 2. Balance sheet. It shows assets, liabilities, and capital on a specific date. 3. Cash flow statement, that shows cash inflows and cash outflows. We will now discuss features of financial accounting. It is historical in nature. It is based on actual transactions and it follows accounting standards, and it provides information to external users. Let us take an example. Suppose a company wants to present its annual financial performance to shareholders. The financial statements prepared for this purpose are part of financial accounting. Second branch of accounting is cost accounting. Cost accounting is concerned with determining, controlling, and reducing the cost of products and services. It helps businesses understand how much it costs to produce goods or provide services. Objectives of cost accounting are determining product cost, cost control, cost reduction, improving efficiency, and profit planning. Cost accounting is very important as it helps management identify wasteful expenditure, improve productivity, fix selling prices, and increase profitability. An example: suppose a furniture manufacturer wants to know the cost of producing one table. Cost accounting calculates material cost, labor cost, and overhead expenses to determine the total cost per table. The third branch is management accounting. Management accounting involves analyzing accounting information and presenting it to management for planning, decision-making, and control. Unlike financial accounting, it focuses on internal users. Users of management accounting are managers, department heads, executives, and business owners. Objectives of management accounting include planning future activities, decision-making, performance evaluation, budget preparation, and strategic management. Management accounting uses tools such as budgeting, forecasting, ratio analysis, break-even analysis, and variance analysis. Management accounting helps management answer questions such as: should a new product be launched? Should production be increased? Which department is performing better? How can profits be improved? Let us take an example. Suppose a company is deciding whether to expand into a new market. Management accounting provides forecasts, cost estimates, and profitability analysis to support the decision. Now let's understand the difference between financial accounting, cost accounting, and management accounting. First, let us discuss their purpose. Financial accounting is used for reporting the financial performance and financial position of a business. Cost accounting focuses on determining, analyzing, and controlling the costs incurred in producing goods and services. Management accounting helps managers make informed decisions and improve business performance. Next, let's look at the users of these accounting systems. Financial accounting is mainly prepared for external users such as investors, creditors, government agencies, and shareholders. On the other hand, cost accounting and management accounting are primarily used by internal users, especially managers and executives within the organization. Now, let's discuss their focus. Financial accounting focuses on the overall performance of the business. Cost accounting concentrates on the costs of products, services, departments, or activities. Management accounting focuses on planning, controlling, and supporting future business decisions. The next basis of comparison is nature. Financial accounting is historical in nature because it records and reports past transactions. Cost accounting uses both historical and current cost information. Management accounting is future-oriented and helps in forecasting, budgeting, and strategic planning. Finally, let us look at the reports prepared under each branch. Financial accounting produces financial statements such as the income statement, balance sheet, and cash flow statement. Cost accounting prepares cost reports that provide detailed information about costs and cost control. Management accounting generates management reports, budgets, forecasts, and performance analysis reports to support decision-making. To summarize, financial accounting tells us how the business has performed in the past. Cost accounting tells us how much it costs to produce goods or provide services. And management accounting helps managers plan for the future and make better business decisions. Understanding these differences is essential because each branch serves a unique purpose and contributes to the effective management and success of an organization. Accounting plays a crucial role in every organization because it records business transactions, measures profitability, helps in budgeting, supports investment decisions, facilitates tax compliance, improves business control, and enhances transparency. Without accounting, it would be difficult for businesses to monitor their performance and make informed decisions. Let us now quickly recap today's session. We learned that accounting is the process of recording, classifying, summarizing, and interpreting financial transactions. Financial accounting provides information to external users through financial statements. Cost accounting focuses on determining and controlling costs, and management accounting supports planning, decision-making, and managerial control. Together, these branches help organizations operate efficiently and achieve their objectives. Friends, with this, we come to the end of today's session on Introduction to Accounting. Thank you very much for watching this video. If you found this video useful, please like, share, and subscribe to our channel. On this channel, we regularly upload educational content on economics, finance, banking, insurance, financial crime, GST, income tax, fintech, accounting, financial management, and investment management in a simple and easy-to-understand manner. Don't forget to press the bell icon so that you receive notifications whenever we upload a new video. Thank you for your support. See you in the next video with another interesting and informative topic. Till then, bye and take care.